Gautam, before I come to the big caps, you were the first one to point out your penchant for capital goods, especially the one that ran up, Voltas. Do you still like Voltas, and would you add Crompton Greaves or such others to that list?
So we still have a sell on Crompton, so no. And why we like the Voltas in terms of playing in this market momentum rally is there are very few stocks in the capital goods industrial space which have a mix of both quality business, strong balance sheet, and more importantly supportive valuations. So there are quality companies which have the first two but are not necessarily cheap or attractively valued. So Voltas ticked all the right boxes for us, and obviously the order flow visibility which came in over the last couple of weeks, that kind of acted as a catalyst. Yeah, so even at these levels we do like Voltas. It's one of the safer ways to play any potential recovery in the investment cycle. So Voltas, possibly even Blue Star, slightly more illiquid name Carborundum. So these are the names we have been recommending from the mid-cap basket in the industrial space, rather than going chasing more expensive names or chasing names which have balance sheet issues.
Okay. What about a space like autos, where we have seen some serious outperformance from a couple of these names like Eicher Motors, etc. Names like Tata Motors continue to hit new highs. Anything there that you are still betting on?
So yeah, so Eicher has been one of our top picks within the auto space as well as mid cap. So we continue to like the name. We still have a buy, but yeah, you could argue that after the run, specifically over the last month, it's now reaching levels where definitely the valuation comfort is no longer there. So we have to re-look at that name. Tata Motors, it's still a buy. We still like the name, but we just removed it from our top buy list for India as a whole. Specifically again given where the valuations are and the re-rating already done, but we still like the name. I think there's still room for it to do well over the next 6 to 12 months.
Okay, I just want to complete the capital goods argument. BHEL?
So BHEL, we have been a contrarian buyers from a sell side perspective, and we still maintain our buy. The problem with a stock like BHEL, which you've seen even early last decade, it's very difficult to time the bottom and when the cycle turns. The stock is attractively valued, but it has been attractively valued for more than a year now. Visibility on order flow improvement not there clearly. There is some progress on what's happening in the power sector mess, and that would be the biggest driver for a stock like BHEL ultimately. The rally we have seen recently is again more macro or broader market driven, in terms of market is hoping for some kind of recovery. BHEL is again falls into the basket of very being attractively valued and a strong balance sheet, so it's also participated in that rally. But for a sustainable big up move over next 3 years, we have to see visibility on power sector restructuring, etc. On that, obviously the big point to be made is these kind of issues do not get resolved overnight or in a quarter. It takes 2 to 3 years to get resolved, and we are only 1 year into it. So over the next 2 years the trajectory will be volatile, but we will still have a buy on BHEL and like the name even at current levels.
You track this entire, election and the trigger that the elections will be for the markets. You track it very closely, Gautam. What's your sense on how important the Delhi polls are today to give you a clear indication of things to come, and what is the market actually going in with in terms of expectations?
So I think talking to investors for the state polls, Delhi is the one where the market is not hoping for a favorable response for the business friendly party, and so that's where the market expectations are right now, based on discussion with investors, and around that whatever the results are. But again, you have to remember that from a national election point of view, Delhi is not that big a state in terms of seats. So whether you can read much from it either way, I don't think so.
Actually, Gautam, you must be more in touch with foreign investors than anybody else in the market. What is the sense you're getting in terms of their approach to the midterm polls? Will a return of, say, the UPA coalition or a third front coalition seriously disturb their confidence?
It will be a negative for the sentiment for those investors for sure, to begin with. But what we have been telling them and what we have been highlighting to them is two things. One is even the current UPA government, despite our reservations from the market point of view over the last few years, has course corrected over the last 3-4 quarters. Which is being ignored right now in the market environment, but they have course corrected. And even the third front government, based on past experience of 96 to 98, they did manage to do a lot of positive measures, reforms, etc. for markets, for the economy, and the economy did reasonably well in that period. So purely from a fundamental economics point of view, my view is that either of the three dispensations will continue to do the right things for the economy, because that's needed, that's the need of the hour. Sentiment obviously will be different in these three formations. So sentiment will get a knocking more in the case of a third front government, less so in the case of a UPA government. Specifically, if they come out with a clearer agenda for policy making and reforms, etc. And obviously, it will be much more positive if the NDA in some form comes to power.
Just getting back to individual stocks, we've seen quite a bit of outperformance in the broader markets, as we were discussing earlier as well. Apart from the stocks that we discussed with you, anything that you're incrementally recommending at this point in time from any pockets?
So the pockets which we are recommending is two. One is specific names in the industrial space, as we talked about. And then there are obviously some names in the agri basket which still look interesting despite the run, because that part of the economy is doing well and will continue to do well. So in that pocket we are recommending Coromandel and Rallis. So that pocket will also do well. Beyond that, there will be bottom-up names which should continue to do well, both from business as well as valuation support point of view, like Motherson Sumi, Imami, Chhaochharia. These are the names we are talking about in the mid-cap space.
Okay. Since you are talking about valuations, let me pose this question to you, Gautam. How are you reacting to the movement in the Infosys stock? Because now we've seen that valuation gap between TCS narrow a tad bit. Influential brokerages are increasing their target prices on the stock as well. What's your view on Infosys?
So Infosys remains one of the top picks in the IT services space for us, and even from India overall portfolio perspective, it's one of our most preferred picks from an overall market perspective. So despite the valuation gap narrowing which you've been arguing for, I think there is scope for it to narrow more. Remember, in the good old days, it's also traded at a premium, and it was the premium stock. So that can continue for a while. The key parameter would be whether they keep on delivering and surprising positively, which we believe they should be on track to.
Okay, Gautam, finally, if you're positive on cyclicals like say a Voltas and a BHEL, would stocks like IDFC also be your buys?
So again, just to clarify, from a top-down perspective, we are not overweight industrials at this stage. So this is more a tactical thing on individual stocks for investors wanting to play this from a near-term perspective. We're still too early to really bet big on big investment cycle recovery. I think that's 6 to 9 months away before we start pushing for it more aggressively. So at this stage, it's more tactical, more individual names. So IDFC, no. IDFC, in fact, is a sell for us.
All right.
All right.
Gautam, thanks for joining us and giving us your view. Thanks a lot. Have a good day. That's the word coming in from UBS Securities. But let's go.